In November, a company most people had never heard of signed a $9.7 billion contract with Microsoft. 6 months later, it signed a $3.4 billion contract with NVIDIA. And NVIDIA didn't just become a customer, it took the right to buy $30 million shares of the company. And here's a number almost nobody talks about. Last quarter, the same company's actual AI revenue was $33.6 million. 77% of its revenue still came from mining Bitcoin. Now watch what happened next. In one 3-week stretch, this company got added to Russell 1000. It emerged as a finalist for $22 billion Anthropic contract in Australia. The company is IREN. Wall Street is valuing it like an AI infrastructure giant. Its income statement says it's a Bitcoin miner. Today we figure out which one is telling the truth and exactly what has to go right for this stock to work. I'm Leo. This is for educational purposes, not for financial advice. To understand IREN, forget companies for a second. Think about a river. In 2018, 2 Australian brothers, Daniel and William Roberts, were working at Macquarie, a big infrastructure bank. Their job was financing power plants and energy assets. They noticed something that most tech people missed. The most valuable thing in modern computing isn't the chip, it's the electricity. So they went looking for standard electricity, places where power was abundant, cheap, and had nowhere to go. Old pulp mill towns in British Columbia, sitting next to hydroelectric dams, the wind country of the Texas Panhandle. They founded a company called IREN Energy. In 2024, they renamed it IREN. And on that cheap power, they built data centers. A data center is just a warehouse full of computers. That's it. Electricity goes in one end. Useful computing comes out the other. And an enormous amount of heat comes out the sides. The unit you need to know is the megawatt. 1 megawatt is roughly enough electricity to power 750 homes. IREN controls thousands of megawatts. IREN owns a river of electricity. For 7 years, I used that river to power a gold mine, Bitcoin mining, machines that turn electricity into digital gold. Now it's building a brain factory on the same river, AI data centers, machines that turn electricity into thinking, and rent that thinking out to AI companies. The entire investment question in this video is one sentence. Can a gold miner actually run a brain factory? But first, a critical distinction that the whole thesis hinges on. IREN says it has a 5 megawatt power portfolio. 5 megawatt is roughly 5 nuclear reactor worth of electricity. But the amount of data center is actually operating today, about 810 megawatts. That's the difference between owning the right to the river and having a working mill sitting on it. So let's start with what IREN actually does today, Bitcoin mining. Here's the honest, non-technical explanation. Bitcoin mining is a lottery. Every 10 minutes, roughly, the Bitcoin network runs a drawing. Whoever wins get a prize paid in new Bitcoin. To play, you buy a lottery ticket, except you don't buy them with money. You buy them with math. The more math you can do per second, the more tickets you hold. And that's what hash rate means. It's your guessing speed. IREN's fleet does 50 quintillion guesses per second. 1 quintillion is 18 zeros. It's one of the largest mining operations on Earth. And the machines that do it are called ASICs. This word matters, so I want to be precise. An ASIC, the chip, built to do exactly one thing, insanely fast. It buys Bitcoin lottery tickets. It cannot run AI. It cannot run a website. It cannot do anything else. It's a beautiful, expensive, single-purpose machine. Now the catch. Roughly every 4 years, Bitcoin has a halving. The price for winning the lottery gets cut in half. It's a gold mine where the gold gets thinner on a fixed, published schedule forever. So how good is IREN's mine? Honestly, very good. IREN mines the Bitcoin for all-in cost of around $41,000. Bitcoin has been trading between $90,000 and $120,000. Although today it dropped to about $64,000. That's a genuinely excellent low-cost mining business because of that cheap power. Which brings us to the strangest fact in this entire history. Last quarter, IREN took a $140 million write-off on its own mining machines. It's decommissioning ASICs, ripping them out deliberately. Mining revenue went from $167 million down to $111 million on purpose. Management is tearing out a profitable gold mine. Why? Because they want the river back. To explain why, we need one more piece of vocabulary, the GPU. A GPU, graphics processing unit, is a chip originally built for video games. Its trick is that instead of doing one completed calculation very fast, it does thousands of simple calculations at the same time. Here's the analogy. A regular computer chip is one brilliant professor solving one hard problem. A GPU is 10,000 high school students all doing simple math in parallel. And it turns out for AI to either train a model or answer a ChatGPT question, it's not one hard problem, it's billions of simple ones. So the 10,000 students win, overwhelmingly. That's why the entire world is buying GPUs, not CPUs. Every AI lab, every hyperscaler, every startup. And here's what changed. And this is the part I really want you to understand. 2 years ago, the bottleneck was getting GPUs. NVIDIA couldn't make them fast enough. Today, increasingly, the bottleneck is somewhere else entirely. You can buy the GPU, but the GPU is a very expensive paperweight until you can plug it in. And plugging in tens of thousands of GPU requires a huge amount of electricity delivered to a specific piece of land with a substation, a grid connection, cooling, and fiber. And that takes years. The waiting list to connect a large new load to a power grid, the interconnection queue, runs for years in most of America. Transformers have multi-year lead times. Permits take forever. So the most scarce resource in AI is no longer the chip. It is delivered power. And IREN, by pure accident of his Bitcoin origin story, spent 7 years quietly collecting exactly that. The gold mine was sitting on the river everyone suddenly needed. Okay, so IREN has the power. Now what does it actually sell? Because this is where most retail investors get confused. There are 3 completely different businesses you can run on that river. Same electricity, wildly different economics. Business 1, be a landlord. This is called co-location. You build a building, you bring in the power and the cooling, and your customer bring their own computers, plug them in. You are renting them a room. That's it. It's a great business, low risk, boring, and it earns roughly $1 million per megawatt per year. Business 2, be a hotel. Now you don't just rent the room, you own the furnitures. You buy the GPUs yourself. You install them, you connect them, you rent them out fully serviced. The customer just show up and use the compute. This earns roughly $10 million per megawatt, 10 times more. Business 3, be a 5-star resort. You own the furniture and you provide a deep layer of software on top. Orchestration, monitoring, storage, tooling, support. You make the compute easy to use. This is what CoreWeave does. If you watch my CoreWeave episode, this is exactly the layer we spent the whole video on. CoreWeave earns roughly $20 million per megawatt. So where does IREN sit? IREN chose the hotel. It buys the GPUs itself. It owns them. And that's a real strategic decision with 2 consequences. One great, one dangerous. The great part is it captures 10 times the revenue per megawatt that a landlord does. It owns the land, the substation, the building, and the machine. That's genuinely rare. And the dangerous part is when you own the furniture, you also own the risk that the furniture goes out of style. And GPU goes out of style fast. NVIDIA ships a new generation of GPU roughly every single year. H100, then H200, then Blackwell Ultra. Each one dramatically better than the last, which means the hotel room you bought for $40,000 that rents for $2 an hour today rents for less next year and less the year after because a better room just opened across the street. A landlord doesn't have this problem. The tenant eats the depreciation. IREN eats it. This is why IREN underwrites its GPU on roughly 2-year payback. Not because it's conservative, because it has to be. The machine has to pay for itself before it becomes yesterday's technology. Now, one more wrinkle, and it's the big one. Remember, IREN's existing buildings were built for ASICs, Bitcoin machines, and Bitcoin machines are world's most forgiving tenants. If power gets expensive, you just turn them off. That's called curtailment, and miners love it. You get paid to shut down. AI customers are the opposite. Microsoft is not okay with you turning off its cluster because electricity got pricey on Hot Tuesday. AI needs near perfect uptime. It needs liquid cooling, actual fluid pipe directly across the chips, because modern GPUs run so hot that the air simply cannot carry the heat away fast enough. So converting a Bitcoin shed into an AI data center is not flipping a switch, it's a rebuild. New cooling, new networking, new redundancy, hundreds of millions of dollars. The river is transferable, the mill is not. Which brings us to November 3rd, 2025, the day everything changed. IREN signed a $9.7 billion 5-year contract with Microsoft. Microsoft will rent GPU capacity at IREN's Texas site, 200 megawatt of critical IT load, NVIDIA's newest GB300 systems, and crucially, Microsoft prepaid 20% cash upfront before the machines were even running. And then in May 2026, a $3.4 billion, a 5-year contract with NVIDIA itself, plus a warrant letting NVIDIA buy 30 million IREN shares at $17. NVIDIA is now IREN's customer, and NVIDIA is now potentially IREN's shareholder. The company that sells you chip is renting the chip back from you and taking a stake in you while it does it. Is that a powerful endorsement? Absolutely. Is it circular in a way that should make you slightly uncomfortable? Also yes, both things are true. And here's a number that this entire video is built around. IREN reports $3.1 billion of ARR under contract. ARR means annualized recurring revenue. It sounds like income. It's not income yet. Actual AI revenue annualized based on last quarter, around $134 million. Here's the honest way to think about that gap. A signed lease on an apartment building that has been built is not rent. It's a promise. It might be a very good promise, and Microsoft is about as creditworthy as a customer gets. But it becomes revenue only when the data center is finished. The GPUs are delivered, they're installed, they're commissioned, and the customer accepts them. IREN says this themselves in its own filings. Microsoft alone is somewhere around 50 to 60% of that contracted ARR. One customer, more than half the future. Now, in fairness, here is the strongest fact in the entire bookcase. That Microsoft contract is so credible that in June, lenders gave IREN a $3.65 billion loan secured against it and rated it investment grade single A. It was the first investment grade rated GPU financing in the US private placement market. Think about what that means. Sophisticated institutional lenders look at a former Bitcoin miner's GPU contract and said, this cash flow is as safe as a utility. That is not nothing. That is a genuine differentiated achievement. And it funds about 96% of the GPU for the Microsoft deal. But notice the fine print. It funds a Microsoft piece, not the rest of the ambition. Because the ambition is enormous. IREN wants a fleet of 150,000 GPUs by the end of this year. Brain factories are brutally expensive. So who is paying? In 8 months, IREN raised roughly $9.3 billion. Microsoft's prepayment, that GPU facility, and the big one, about $6.7 billion in convertible notes. A convertible note is a loan with a twist. The lender can convert it into stock later, if the stock goes up. For the company, it's wonderfully cheap. Some of these carry interest rate of 1% or even 0.25%, almost free money. But nothing is free. What you're really doing is selling your future shares at a fixed price. If the stock soars, these lenders become shareholders, and everyone who already owned the stock owns a smaller slice of the company. And that's dilution. And IREN's dilution is not subtle. At its IPO in 2021, IREN had about 20 million shares. Today, it's over 350 million. The share count has grown roughly 17-fold in 5 years. Existing shareholders are, to a very large degree, funding this AI transition themselves by owning less of the company every year. And the management use the phrase fully funded a lot. So let's test it honestly. The Microsoft flag, genuinely verifiable, about 96% financed. That claim holds up. But the whole plan, 150,000 GPUs, Sweetwater, Spain, Oklahoma, Australia, that is only funded under a set of optimistic assumptions, and it depends on the capital market staying open and friendly. Fully funded is doing a lot of work in that sentence. Now the bookcase. First one, power is the moat. Everything else in AI can be bought. Power, land, and grid connections cannot. Not quickly. IREN has 5 gigawatts across 4 continents, secured before the world realized it mattered. You cannot go get that now. Second, they own the whole stack. Land, substation, buildings, and the GPUs, not leasing space like CoreWeave does. And that ownership is precisely why they landed the first A-rated GPU financing in the market, at a blended cost of debt of 6%. Cheap capital is an advantage in a capital-intensive business. 3, the validation is real. Microsoft doesn't sign $9.7 billion with a company it doesn't trust. NVIDIA doesn't take an equity stake in a company it thinks is a joke. Fourth, they can actually build. These people went from 0 to 50 exahashes in 30 months. They energized the Sweetwater substation on schedule. Whatever else you say about them, they are definitely world-class at pouring concrete and getting electrons to a site. Fifth, the crossover is coming. If the Microsoft ramp lands, AI revenue overtake Bitcoin revenue within about 2 years. And at that moment, the market has to stop calling this a crypto stock. That re-rating is the entire trade, not a bear case. First, it's still a Bitcoin miner. 77% of last quarter's revenue, and last quarter was a miss, a big one. Revenue came in around 145 million against expectations of 220. That's 34% miss. This is a company priced for perfection that just missed by a third. Second, it's getting a CoreWeave multiple with your CoreWeave business. Remember the megawatt math? CoreWeave earns $20 million per megawatt. IREN earns about 10, half, because the software layer isn't there. And here's the tell. IREN had to buy a software company, Marintes, to get one. 3, one customer is half the book. If Microsoft's ramp slips even 2 quarters, the story slips with it. 4, the GPU aged faster than the loans against it. You are borrowing over 5 years to buy hardware that loses pricing power in 2. 5, power alone is not a moat. TeraWolf has power. Cypher has power. Core Scientific had 8. Applied Digital, they all had power. In fact, TeraWolf just signed a 20-year compute deal with Anthropic. So IREN is not the only X miner sitting on a river. 6, And this is the newest one. On July 1st, Bloomberg reported that Meta is planning to sell its own excess AI compute, Meta Compute, and the entire sector cratered in a single day. CoreWeave down 14%, Nebius down 17%. Think about what that reveals. The customer these companies depend on are also the companies best positioned to become their competitors. And that's a structural fragility, and no amount of good execution fixes it. So what do you actually watch? First, the Anthropic Australia tender. This is a live one. Leaked document reported by Australian Financial Review suggests Anthropic is seeking 1.4 gigawatt of AI compute in Australia, a tender reportedly worth around 22 billion Australian dollar. IREN is reportedly a finalist on the back of its 800 megawatt Band-Aid campus. But read the fine print. Anthropic is expected to split it across 4 or 5 providers, so even a win is a slice, not a whole pie. Second, does IREN finally disclose how many GPU are actually operational? They have stopped giving a clean number. That is itself information. If they start disclosing it, that's confidence. If they keep not disclosing it, ask why. 3. The AI revenue run rate. The baseline is 134 million annualized. Management is targeting 3.7 billion by year end. That is not a growth rate. That is a transformation. Watch each quarter's actual number against it. 4. The Microsoft ramp. First Microsoft revenue recognized is the single biggest de-risking event in this story. 5. The crossover quarter. The quarter where AI revenue finally exceeds Bitcoin revenue. That is the moment this stock legitimately changes categories. Until then, it hasn't. So Bitcoin miner or AI cloud giant? Here's my honest answer. IREN is a very good low-cost Bitcoin miner that happened to be sitting on genuinely scarce, genuinely valuable river of electricity. And it's using that river to buy option on becoming an AI infrastructure company. It's a real option. Microsoft is real. The investment grade financing is real. The power is real. But it's an option that's the only party paid for, and one the market has largely already paid the full price for. And that's IREN. If you find this video helpful, please subscribe, and I'll see you in the next one.